Welcome to Crypto Alpha Edge, your daily crypto market recap 2025. Today's briefing is structured across key themes to help you stay informed and ahead of the market. One of the most significant moves in the crypto space over the past 24 hours came from MicroStrategy. The company, spearheaded by Bitcoin advocate Michael Saylor, confirmed the purchase of an additional 1,045 BTC, valued at approximately $110.2 million. This acquisition brings MicroStrategy's total Bitcoin holdings to an unprecedented 582,000 BTC, cementing its position as the world's largest corporate Bitcoin holder. The purchase was financed through a $1 billion stock offering, and it reflects the company's ongoing belief in Bitcoin as a long-term treasury reserve asset. Notably, Saylor himself posted a short message on X stating simply, "Send more orange," a characteristically bold declaration reinforcing MicroStrategy's accumulation strategy despite recent sideways market conditions. Futures and options data suggest market coiling up. Derivatives markets continue to show signs of heightened anticipation. According to CoinGlass, Bitcoin futures open interest remains elevated in the $75 to $80 billion range, underscoring substantial leverage exposure. Meanwhile, options traders are positioning around the 110,000 to 130,000 strike levels, with a noticeable concentration on calls expiring in mid-June. This options activity suggests traders are preparing for directional volatility, though still hedging both outcomes. Funding rates stay positive, but muted. Current funding rates on major derivatives platforms remain modestly positive, with the average oscillating between negative 0.0038% and positive 0.0050% per 8 hours. These slightly bullish rates indicate that while there's a tilt toward long positions, there's no sign of euphoric leverage. Analysts caution that a sudden price move could still lead to forced liquidations due to the sheer scale of open interest across both futures and options. BTC hovers between key levels, $109,000 support and $114,000 resistance. Bitcoin has spent the last day consolidating within a well-defined range, bouncing between support near $109,000 and resistance in the $113,000 to $114,000 region. This price behavior has formed a coiling pattern that many traders interpret as a precursor to a significant breakout or breakdown. Should Bitcoin breach $114,000 with volume confirmation, analysts expect the market to test local highs. On the other hand, failure to hold $109,000 could trigger liquidations from over-leveraged long positions, especially if ETF flows soften. UAE emerges as a global pioneer in RWA tokenization. Beyond price action, the United Arab Emirates continues to push the boundaries of regulatory innovation in crypto. On June 8th, Dubai's VERA introduced updated frameworks for real-world asset tokenization, aligning with the country's ambition to become a global digital finance hub. This follows a record-breaking month in real estate, with Dubai recording over $18.2 billion in sales during May, a 44% year-over-year increase. Meanwhile, a new platform called Pripco Mint, backed by the Dubai Land Department, officially launched on the XRP Ledger. It enables tokenized property titles and fractional ownership, marking a major leap toward institutional-grade blockchain use cases. Strategic outlook markets are currently defined by high leverage, shallow spot flows, and a tightening price range. With open interest peaking and funding rates modestly positive, conditions are ripe for volatility. Traders should watch for a breakout above $114,000 or a breakdown below $109,000, as either move could be magnified by derivative liquidation pressure. At the same time, macro innovation, such as the UAE's RWA pivot, continues to lay groundwork for the next leg of institutional adoption in crypto. This has been your daily institutional-grade crypto briefing from Crypto Alpha Edge. Stay sharp, stay early, stay informed.